And in reality, I think markets focus very quickly on the likelihood that the geopolitics allowed Iran to think about what their response would be, and I think that de-escalation seemed a likely event. So I think oil is the transmission mechanism for those geopolitical worries, and that's what our focus as investors happens to be. So we were very worried about the transmission through oil, potentially higher oil leading to higher inflation, leading to central banks in Asia not being able to cut rates, all of the conditions that we thought were very important as investors. So look, given the news overnight, I think stocks are reacting because, again, we can look at fundamentals, we can focus on the companies that are likely to be winners, etc. So this great message for 2025 has been very clear. We came into the year seeing uncertainty and seeing volatility. That has undoubtedly been the story of the first half of 2025, and really we can focus on the companies we think are going to benefit from potentially a rebalance away from the US.
But I mean, tell me this, right? We still have 24 hours before this Israel-Iran ceasefire kicks in stages, right? A lot can still happen, and a lot of damage can be done in that period of time, right? Which means the fighting and the war there continues. So, by my tally, that makes it, I think, 3 wars, major ones, going on simultaneously at the same time, and Wall Street is within striking distance of record high. It makes no sense to me. Does it to you?
I think investors continue to focus on fundamentals. I think the story of 25 is that we had this uncertainty, with uncertainty around tariffs, the impact on inflation. Companies continue to deliver great profits, and companies have been incredibly resilient. I think that the impact of tariffs in particular has been perhaps a little bit more muted than investors imagined at the start of the year. I think that the US economy, we have a central thesis that the US economy is likely to slow in the second half of the year, but corporate profits have been resilient.
But no recession?
So we believe that we believe that growth will slow. I think that the recession probability, I think if tariffs had been as challenging as perhaps the Liberation Day numbers, perhaps so, but I think the president has indicated that, look, we've got July the 9th upcoming. He looks like he's more likely to perhaps delay or just be very, very lenient around his major trading partners, the EU, Japan, etc., China. And I think that is likely that he's looking to do some sort of deal there. So look, they have de-escalated the tariff narrative as well. And I think that we as investors can focus on fundamentals, which is really where we want to be.
All right, so the potential negative impact of tariffs, that has been underwhelming, thankfully, I guess, right? I need to ask you, though, what about what's happening in the Senate right now, the big budget bill? We've heard some people telling us that is also likely to underwhelm, in the sense that is it likely to push the deficit higher? Probably, but not by nearly as much as a lot of people had feared. What do you think?
So I think the key worry for us, we're Asian investors, the key worry really is around the US. We've had this great exceptionalism story, a big concentration of global capital into US markets. You've got the fixed income markets in the US, you've got rates, some worries around US debt, some worries around the dollar. The dollar's been very weak. This potential rebalancing, we've seen US markets haven't been driving ahead compared to the rest of the world like we've seen for the last few years. So with that brings up this narrative around investors thinking about diversification, thinking about the likes of Asia, about Europe, and that potentially moves money away from the US dollar. And I think that's where that narrative around the budget, worries about the fiscal situation, etc., leads some investors to think about that.
So